Are you struggling to invest in property this year and need help buying? Then you need to book in a consultation with Investor's Dream and let us do the hard work for you. Don't fall victim to missing out on incredible deals like everyone else. Lock in a meeting today. Go to investorsdream.com.au and secure your financial freedom today.
Welcome to the Smart Property Investment Show, the podcast by investors for investors.
G'day, how you going? Welcome to the podcast. Thanks for joining us as we try and get some sense of this property market right now. Everyone's out there buying property, whether it's commercial or resi, myself included. I'm in the game, trying to work out how I can compete with every other person in Australia for some of these great assets which are out there. But supply and demand, it's a tough equation right now. There seems to be more people buying than what there is selling. So it is a seller's market, which makes it challenging for us buyers. And you all know, if you've been tuning this podcast for many years, that the best investors are those which are finance ready. You're good to go. So when you find something, you can move decisively to secure it, which in a competitive market is even more important. But that means you've got to get your finance sorted out. And right now, it's pretty tough. Banks are happy to lend, and there's some pretty sharp rates going around right now. But try and get yourself a mortgage in this environment because it's taken a long time to get stuff approved. I want to get some sense for this market through mortgage brokers right now, both the first party and the third party channel. So third party channel being mortgage brokers, first party being direct to your bank, how it's different, what's going on, what sort of finance is good. Nicole Cannon in her mobile studio. She's from Pink Finance. Nicole, how you going? Long time friend of the show.
Hi there, Phil. Thanks for having me. Yes, on holidays, but due to this mobile technology we've got, I'm able to get on live.
That's good. Now, I read it across very reputable sources, and one of them being the advisor.com.au, which is part of the Momentum Media family, that mortgage brokers, your market share continues to rise. It sounds as though people are happier using mortgage brokers than going direct to the bank branch. And now more people go to a mortgage broker, considerably more people go to a mortgage broker than what they do to a bank branch. And I know within our organization, one of the partner businesses, Momentum Intelligence, is just going through its next iteration. I think it's the third installment of the Consumer Access to Mortgages report, which always shows how great mortgage brokers are and the value they do provide. And we'll have those numbers and report back soon. But Nicole, good time to be a mortgage broker, or is it as hard as ever?
Yes, it is a good time to be a mortgage broker. We've got a lot of inquiries, and our inquiry has never, ever been more busier, but it's a hard slog. So every deal is taking a very long time to get across the line, and it's a lot more documentation, a lot more compliance. The process to actually get a loan ready is also taking a lot longer. So whilst there, as you mentioned earlier, the lenders are happy to lend and there is amazing rates, it just takes a lot longer, and it is very different than what it used to be. So people who we helped 5 years ago and are wanting to come back for their second purchase, it's a very different experience to what it was back then, just because of the level of complexity of each deal now.
Yeah, it is a lot more complicated. And this is the reality of securing finance in this market. Whether you go to a mortgage broker or a bank, you still got to do the work. Thankfully, if you use a mortgage broker, they do the majority of it for you, which is pretty good. And Nicole, a long-time advocate of mortgage brokers, seeing them as a real key part of any investor's team to actually be a better property investor. And we'll go into some of that today. But the rigor of getting a mortgage right now, and a lot of people think they go down this pathway of thinking, it's hard to get a mortgage because banks don't want to lend money. The reverse is true. The banks derive a significant amount of their income and therefore the value of a bank and therefore its balance sheet through lending out home loans to people. You just need to think over time, a 25-year mortgage, you probably pay twice the amount of the loan in interest, right? The simple rule 50-50. So it's good business for banks to lend money. It's just hard to get it right now. And considering the market, and you've probably got some observation on this, if you're not finance ready or you haven't got your stuff sorted out before you even start looking at property, you're madness, right? Because it can take upwards of a couple of months to even get approved for a loan.
Absolutely. We are telling all of our customers when we speak, get your pre-approval. And I know it's a very interesting one. We will still absolutely do pre-approvals because I think it's not acting in our customers' best interest if we don't. But the process it's taking, and I've seen on forums where there's less people doing these pre-approvals purely because of the time that it's taking. But I find the customers who do have their pre-approvals, who are ready to go, they're more confident in their negotiating and they know exactly where they stand in terms of the price range that they can go for and, the rental returns that they need in order to be able to get the margins that they're wanting. So whilst some lenders are taking a couple of months, we've got plenty of lenders that we can get pre-approvals done within a week. And that's the beauty of a broker, where we've got over 50 lenders on our panel, and we used 25 of those lenders in the last 12 months. So we really research all those lenders, and if we need to get a pre-approval fully assessed within a week, we've got a suite of lenders that can actually do that. They're not the majors, and they may not be a brand that people are familiar with, but they're still solid and safe lenders that can give competitive rates and quick turnaround times, and that's the key.
And that's an important point. A lot of people think that if you don't get a loan from a Westpac or a CBA or an ANZ or a NAB, it means that it's not a good home loan. I'm happy to report that one bank's dollar is the same as another lender's dollar. It's all the same. It's the same money. So don't feel as though you need a flight towards the inverted commas safety of a big brand. There is a whole bunch of lenders out there, and industry terminology, there's different ways to say it. There's like second tier lenders or non-major banks or subprime lenders, or, there's a whole bunch of range of them. Some of the mortgage managers, it just depends where they get the money from. So don't go into any sort of assessment of your lending capacity and therefore getting approval by a lender that you might not necessarily know the name of. Like Bendigo Bank, for example, is the 5th biggest bank in Australia, but people still go, well, why would I use Bendigo? Aren't they some small little mum and dad bank and they're unreliable? How do you find it a lot trying to educate people on, don't just think about the big four?
Yeah, yes and no. I mean, actually, I very rarely use the big four, to be honest.
Okay.
I will use them when a specific policy is required or if they are absolutely the best lender, but often they're not the most competitive lender. Our aggregators, so our group that we work under, we've got 5 white labeled products that are exceptional, and they're quick in turnaround times, they're low in rate, and we've got amazing support. So if we need to fight for a deal, we've got great BDM support to absolutely back us up and help us get deals across the line. And I think there's so many layers into how we select a lender now. Back in the day, it was just, let's just select the cheapest rate and we'll go for it. But we need to look at, specific policies, specific property types. Lender turnaround times is now a new factor in which determines what lender that we select now for our customers. Because if somebody wants something sooner, then maybe waiting 6 weeks or so, then we have to select these other lenders.
Yeah, and might as well use this bit of an education for our listeners. Nicole, for those that don't know, you spoke about a white label products or white label lending and an aggregator. So what an aggregator is, and for those that don't actually understand how the mortgage industry or the third-party mortgage industry works, there is literally thousands of mortgage brokers right across Australia. Some say 12,000, Nicole, some say 15,000. It depends what numbers you agree with, and there's different measurements for it. But say there's 12,000 mortgage brokers in Australia. Every single bank or lender doesn't want a direct relationship with every single one of those brokers. So what they do, they have a relationship with a business called an aggregator. And what happens is that mortgage brokers operate underneath an aggregator, Pink Finance included. And who's your aggregator, Nicole?
We aggregate through AFG.
Okay. So AFG has been around for 25 years plus. It's listed on the Australian Stock Exchange. And I would say AFG, not counting their new acquisition, which is another aggregator, Connective, has probably got a couple of thousand brokers operate under the AFG banner, Nicole?
Yes. I thought it was a little bit more than that,
maybe,
to be honest.
2,500. I'm sure I'm going to get AFG on the phone to me. Anyway, it's a big company, right? So these brokers operate as under the aggregator, which is AFG. And there's typically 2 ways that mortgage brokers can operate. They can have their own credit license, which means they look after all the compliance, or they operate as a credit representative under their aggregator. All sounds really complicated, but it's really, really simple. What the aggregator does, it gives the mortgage broker access to a whole bunch of different lenders. So AFG in Nicole's situation would have the lender relationships. She said there's 50 different lenders that there's a relationship with, and then they aggregate that out to everyone underneath them. So that gives Nicole access to all those different lenders and the products within it, which could be thousands of products, right? Like this is how big it gets. Now, you spoke about white label products. Let's have a chat about this. So if I go to my mortgage broker as a property investor and they go, Mr. Tarrant, yes, you can get a CBA loan, but I know it's probably going to take us about 2 months to get that approved. I actually have an X home loans, white label. Do you name them yourself, Nicole? Do you have your own
No, so
No.
it's all under AFG. So we've got AFG Retro and Link, which is AFG self-funded home loans. We've got AFG Alpha, which is your Adelaide Bank and Bendigo Bank product, which is funded by that. We've got AFG Edge, which is Advantage, which is funded by NAB, and then AFG Options, which is funded by Pepper, which is that subprime space.
Okay, so different products. So all a white label product is essentially the money comes from a bank some way, but it hasn't got the bank brand on it. You put a different brand on it. So Advantage is NAB's, they're called a wholesale vehicle where they have a whole bunch of money, which they lend out under different names. Pepper. So Pepper, as everyone knows, or most people will know, is a near prime type lender. It's got a little bit more flexibility. So if you're sort of low doc or no doc type stuff, you might get a Pepper loan. So that's a badge over that. And then you also got Bendigo and Adelaide Bank, which is another wholesale funds. It's just money from a bank and you put your own badge on it. So that means someone can come and see you, Nicole, and get a AFG Edge home loan, which is essentially money from a major bank, but it's just got your name on it.
Correct.
Okay.
Absolutely. And often they have little niches, that are really quite unique and are very customer focused. So, there could be no fees, but offset accounts, or it could be 100% offset with a fixed rate, So there's all these little niches that are really great products from a non-major bank. And that's why I think they're brilliant products and you can get approvals within a week.
Yeah. So the point being, open your eyes. Don't feel as though you have to have a home loan from a specific bank. There is a whole bunch of other products out there which may suit your needs. And let's get into those, Nicole, about how to assess whether or not to go to a product like this. We'll just go to break beforehand. Back in a moment.
Whether you're a seasoned property investor or about to buy your first property, finding the right investment property to buy in 2021 isn't easy. Why do it alone when you could partner with award-winning buyer's agent Paul Glossop? Over the last 10 years, Paul has helped hundreds of clients build multi-property portfolios. Paul's secret is finding off-market bargains that get snapped up before the general public even gets a sniff. Interested? Head to purepropertyinvestment.com today to schedule a strategy call with Paul Glossop.
Welcome back, everyone. Phil Tarrant, host of the Smart Property Investment Show with Nicole Cannon from Pink Finance. Long-term friend of the Smart Property Investment Show, and over many years, you won a lot of awards for being a mortgage broker, Nicole, which is good to see. And business is just as good as it always has been.
Yeah, business has been crazy, actually. We're 200% up on inquiries for this year already. So it's been a very, very busy start to the year. I employed a full-time para broker that started at the beginning of the year, and I am so glad I employed her when I did, because we've literally started mid-January and just have not stopped. So, yeah, lots of inquiries. It's great that investors are coming back to the market after a bit of a hiatus last year. So it's been awesome.
You still enjoy it as much as you always have done? We've been on a couple of study tours together for mortgages, haven't we?
We have been. We went to the UK, so the very first international study tour
for mortgages,
which was a wealth of knowledge. And then I was going to head to the New York one, which got put on hold. So
yeah, that's going to come back next year, I believe. So
hopefully.
Who knows? Everyone wants to get to New York. But you're still enjoying it as much as you always have done?
I am enjoying it. I'm exhausted from it because it is tougher. So I am still loving it more than ever, even though it's a lot harder to get deals across the line. It is still so rewarding when we can say, congratulations, you've got that loan approved. That's someone's first investment, or they're refinancing their investments and saving 1%, which means that they can start saving a deposit for a second investment property, So it's very, very rewarding.
And sort of to our point around having sort of a wider view towards the products available to be an enabler for securing finance, you don't have to go with the major banks. A lot of people mainly base their mortgage decisions around interest rate. Now, in an environment that we're in right now, which is a pretty competitive market, and you need to act decisively if you want to be in the game, often the interest rate is probably pretty low down the list of priorities for most property investors, right?
It is. It is about borrowing capacity is a big thing for investors, especially if you're coming back for your second or your third investment property. Turnaround times comes into it. Policies depending on the type of property that you're looking at. If you're looking at one bedrooms, and then the size may come into it, or location of where that investment property is going to be. So there's a lot of factors. Of course, rate is important, but the interest rate is generally not the first policy or feature
that
The
people are
interest
looking
rate is
for.
not the first feature that they're wanting.
Yeah, I know as a property investor
They've
myself.
got it out there.
Yeah, it's about getting a home loan largely. And you mentioned that you see a lot more investor activity. What's your client base like? Are they mainly owner occupiers or investors, Nicole?
The investors are certainly coming back. So a couple of the relationships I had with investment companies, they literally stopped for 9 months. So there was that referral source had stopped, but they definitely have come back. I would say about 30% of my inquiries back into being investors. And that's a combination of refinancing. We've got people accessing the equity from their current investment properties, getting a deposit to purchase another one. And we've also got the case, a few first home buyers and now deciding I'm going to forego any first home buyer benefits. I just want to get into the property market. So my first property is actually going to be an investment property.
Do you think the people you're chatting to right now, whether they're first-time buyers or first-time investors or rent investors, whatever you want to call them, and they're sort of building a portfolio, you've been at this game for a little while. Is your average borrower a lot more educated today than what they were a decade ago?
Definitely. There's so many more tools out there. I mean, I'm nudging 20 years soon. So
Wow.
broking, even 20 to 15 years ago was very, very different. There's a lot more online tools, things like the Barefoot Investor, even the Barefoot Investor gives people some information to start the research process. And you can tell when customers have read different material because you can just tell by the questions that they're asking these days, which is great. People are really taking an interest and want to take this process very seriously. So they are reading information. There's comparison websites, all of this stuff now that people have access to at their fingertips, So people do come certainly a lot more educated these days.
Yeah, and that's very much part of the psychology behind us, or the putting the Smart Property Investment Show together was, back in the day when you started as a mortgage broker, Nicole, the only way you would get this sort of information is at a property seminar somewhere, right? Like on a weekend out in Homebush, whatever. So, information's been democratized a lot more. Now, what's your views towards the ease of lending moving forward? Is it going to get simpler for Australian investors to secure finance, particularly through mortgage brokers? I know there's changes of legislation being banded around best interest duties and all this sort of stuff, which puts the onus on the mortgage broker to make sure they're putting the right product in front of the borrower to help minimize some of the regulation at the serviceability end on behalf of the lender. Is that going to change and evolve and make it easier to secure finance in time?
It's an interesting one, this one. So best interest duty, whilst best interest duty is here, I think the complexity for mortgage brokers is still going to stay. The paperwork, the process that's involved. What will change, though, is the softwares that we've got and the online tools that help us with that process. So the aggregators that you mentioned before have software that we use to be able to submit loans. And those softwares are evolving like you wouldn't believe now. So they're going to help us do the living expense verification. They help us with ID verification and all of that stuff, which takes time and a lot of time, especially with the living expenses, will reduce, which hopefully then will help that process a little bit more. But from a compliance point of view, I don't think that will change, but that is really protecting customers. So when you get a loan from a mortgage broker, you know that that mortgage broker has to act in the best interest of that customer. Whereas if you go into a branch, they are not obliged to fall under that legislation. So it's a different assessment criteria from a branch lender compared to a mortgage broker. And I believe that is a positive thing for the mortgage broking market because there's a lot more assessment that goes into it in decisions for making the choice for our customers.
I was going to ask you about it's called channel conflict, which is people that go directly to a bank branch or they use a mortgage broker. There's inquiry on what's been on sort of recently around like turnaround times with major banks and this particular thing. And from the broker point of view, the discussion is that it's taking considerably longer to get a loan approved if you use a mortgage broker compared to whether or not you go directly to a bank. Are you seeing this personally? Is it playing out in your interaction, Nicole?
100%. So it is. And There are some lenders that absolutely have very different assessment turnaround times if you go into a branch versus via a broker. And weeks difference, not just days. You can go into a branch and get something turned around within 2 to 3 days, which could take 4 to 5 weeks via a broker channel.
Yeah, so it's pretty much saying that banks are giving priority to their direct customers rather than through mortgage brokers. So the inverse of that is you just don't use those lenders, right? This is where 100%. A broker can actually help you out with potentially putting you in with a lender who can even move faster than going directly through a bank channel.
Yeah, absolutely. And we now recommend, with the lenders that we recommend, if that branch, when we do our recommendation for our lenders, and if a lender that has a longer turnaround time, we put that on there. So, Bank A, competitive rate, turnaround time, 3 to 4 days. Bank B may have a slightly lower rate, and it could be 0.01 or 0.02, but their turnaround times is not 3 to 4 days, it's 3 to 4 weeks at least. And so then our customers then have the knowledge to be able to make a decision based on what is most important to them. We certainly can still use that lender that has the 3 to 4 week turnaround time if that is the lender that they really, really want. But at least they've got the choice and the awareness of what else is out there, which may be in their better interests anyway.
Yeah, and this is where a good broker can help you out with that sort of stuff. When we come back, we're going to have a break. We'll chat about Nicole's investing back in a moment.
Are you ready to take your first steps towards financial freedom by investing in property? Maybe you've started your portfolio but need some help continuing to grow. Lachlan Vidler and the team at Atlas Property Group are here to help. As experts in property investment, Lachlan and his team are ready to help you take advantage of some of the best investing conditions in almost 20 years. By completing the research, sourcing and negotiations, Lachlan goes the extra mile to find you a high-performing investment and set you on your path to financial freedom. Book in your free discovery call today at atlaspropertygroup.com.au.
Welcome back, everyone. Phil Tarrant, host of the Smart Property Investment Show, and Nicole Cannon, property investor. You're an investor in property, aren't you, Nicole? How's your portfolio going?
Yes, we do. We've got a investment property up on the Tweed River, which has been going really well. We actually converted that from a residential investment property to a Airbnb investment property.
Okay.
And we've actually doubled our rental income and rental return as a result of that. And especially with COVID and people not traveling, we're only 20 minutes away from Byron, and we've been getting pretty much we're booked out. So it's been a really, really great decision for us, and equity is now there with our properties, which is great.
That's cool. And you never use it yourself? I know you're on the road right now. Do you swing by and check it out for a couple of days, make sure everything's in order?
Absolutely. So there will be a couple of days there right on the river enjoying the sunset. So yes, that's the beauty of it, being able to enjoy our investments as well.
And any reason why you chose a more Airbnb type investment rather than something a little bit more vanilla, like a 2-bedroom apartment somewhere in Sydney?
There's a couple of reasons why. My husband, he loves managing that type of stuff, and he is very good with the communication side of things. So it's part of what he enjoys doing, and he's been interacting with our customers, so was able to do that. We could see that there was a need in that area because there's a lot of tourism stuff around there, but there wasn't many Airbnb properties. And I don't like to do things normally. I like to do things my own way and have a bit of fun along the way. And our long-term plan is that maybe we may want to be up in that area at some point. So it's a good way of trialing it and seeing if we do like the area as well, part of our longer-term plans. We've also got 10 acres that is out in the Central West. So we've got a rural property as well. And both of those properties have certainly gained equity over these last few years too.
Sure. Well, you've got a good career as well, Nicole. One of the beauties of mortgage broking, you talk about technology, is that you don't have to be tied to an office. It's a very portable career, and no matter where you go in Australia, someone needs a home loan, right?
Absolutely. And that's been one of the silver linings for our industry with COVID, is that we can now do the verification of ID via digital ways now. So if I'm on the road and a new customer's come through, the team can say you need to do an ID verification. I can do an online interview, and that satisfies the compliance process. In COVID, we stayed up at our regional rural property for nearly 6 months, which was
Wow.
absolutely lovely, and still kept the business going. And it was great that we could still do that.
Yeah, and this is where technology is an enabler for people like mortgage brokers. So use technology where it can assist with the process and put the energy and value in helping to understand what people are trying to achieve and make sure they get the right home loans. Nicole, I always enjoy chatting. Thanks for your time today. Enjoy the rest of your holiday.
Yeah, we will do. Thank you so much. Really great to chat to you, Phil.
Okay, no worries. It's Nicole Cannon from Pink Finance. I hope you enjoyed that. For all property investors, mortgages is key. It's a game of finance, really. So if you're thinking about buying, start the process now. Get yourself a pre-approval so you can buy with confidence when you go into the market, irrespective of where you're buying. That's a podcast for a different time. Remember to check out smartpropertyinvestment.com.au. Social media, Smart Property HQ is where you'll find us. We'll see you again next time. Until then, bye-bye.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.